This week we're talking supply and demand numbers, and we'll preview the upcoming cattle on feed report. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grevner. With us this week is ag economist Josh Maples with Mississippi State University Extension. Josh, great to see you again.
Good morning, Megan. How's it going?
It is great. Waiting for more rain in this part of the country, and I think in your area too, right? Just kind of been the track we've been on lately.
Oh, we are actually it's about as wet as we have ever been. It is wild down here. Planting in the far south has been no good for most of our farmers down here. And cattle producers, hay season's been really tough down in Mississippi, Alabama, just wet.
Well, hopefully everybody gets a little sunshine today and for a couple of days, and they can finish up what they need to do. So we'll talk those reports coming up. We'll probably talk a little hay and weather and some of that as well. But first, let's recap what happened this week in the markets.
Yeah, so this week, live steer prices averaged $237.50 for the 5-market average. This was up about $1 from a week ago. Looking at a year ago, Megan, still really impressive, up $45 per hundred from a year ago. You remember last year we thought these were good prices. It's not like we're comparing to low prices. June live cattle futures contract down $1.35 from a week ago to $220, basically $225 per hundred. And then the August feeder cattle futures was up about $10 per hundred on the week. This was despite a tough day yesterday, but still closed the week up $10 at 305, basically 306 per hundredweight. Looking at the box beef values, choice box beef 373.67. This was up about $8 from a week ago, and then cash hogs were up about $3 to 98.77 per hundredweight. We swatch over to the lean hog futures. We're up $6.72 on the week to 109.35. And then the pork cutout, shifting over to the pork side here, was up $5.54 from a week ago. Listen to this one, Megan. Pork cutout is at 113.36 this week.
I would have to say, when we look at where box beef prices are, where pork values are, the return of summer grilling season is doing a little bit of the Lord's work when it comes to providing some price support, but also showing resilience and this ongoing strength in consumer demand for these products.
Absolutely, all of that, and the cutout has been really interesting this year. I mean, it's always really interesting, but we always have this conversation about when's the peak going to happen, right? And we've had box beef cutouts that peak in April, March, April. This year we're still going up. I don't know that we have found the peak yet. If you look at kind of the 5-year average, I was just playing with this morning. The 5-year average has us peaking somewhere in the May area. If you just look at when these, typically we see that seasonal peak, and we've blown past that this year. So just continue to push up and up and up on the box beef cutout value. It's going to be really interesting to see where that one finally does top out for the year, because as you mentioned, we are already knee deep in summer grilling season. It's here, and typically you see these prices peak as the purchasing for summer grilling season happens, weeks or even months in advance. So it's been really impressive to watch.
I want to jump back to that 5-market average for live steer prices. We continue to see record-setting price levels week after week. Is there... I know none of us have a crystal ball, right? Like, we don't know when this is happening, but is it concerning that there's not been a break, or we've just been on this steady trajectory higher?
I don't think it's concerning. I think this market's looking for a top. I don't know where it's at. It's we certainly haven't gotten the data to suggest that we're turning the supply story by any big, meaningful way. I think we talked about this a couple of weeks ago. I'm sure you've talked about this with Kenny and Charlie as well. But, we're going to be in for some pretty volatile periods here. And I think that's one thing I hope doesn't get lost. I think we saw some, we see it every week pretty much. But just because cash prices are going up doesn't mean we're not going to see some volatility. And really, if you think about it, as prices get even higher, a 1 or 2% move in prices over a week or two is a really big level. We're talking at 240 fed cattle prices, cash fed cattle prices, 1%, that's $2.40 is a 1% swing. So, a $2 move is not the same as it was when we were talking about $1.20 cattle prices. But yeah, I'm not concerned yet. I really do think this market's looking for a top, but we sure don't seem to have found it.
All right, let's talk slaughter numbers as we take a look at both cattle and hogs. What are you seeing in terms of pace and kind of how things are going right now?
So cattle slaughter, 558,000 head estimated this week. This was down about 24,000 head from a week ago, and also down about 57,000 head from the same week last year. So continuing to see those tighter cattle supply or cattle slaughter numbers that we would expect. Hog slaughter, 2.39 million head. This was up just slightly. I would really call it unchanged. It was up 32,000 head from the previous week, and then up about 5,000 head compared to a year ago. So basically unchanged from a year ago. So similar stories to what we've been talking about, slightly down on cattle, about the same for hogs.
Josh, supply and demand numbers were out this week. As we take a look at those, at least on the grain side of things, it's about as boring as I think a supply and demand report is.
Yeah, and Megan, that's not uncommon for a June WASDE report. We haven't seen big shifts, so yeah, we always look at the corn one for this one in particular, or for every report. The season average farm price remained at $4.20 per bushel. Certainly a continued favorable scenario for livestock producers, anyways, not for our row crop friends, but right now, no big movement that would suggest sharply higher or even any kind of higher feed prices as we move through the year.
All right, as we get into beef productions and some of those elements of supply and demand, I would assume that what's going on with import bans continuing of live cattle from Mexico, that's coming into play as well.
Yeah, I think it is. And, just looking at the import numbers and for cattle in particular, we're going to be down sharply in terms of feeder cattle. We only had a couple of months of bringing cattle in from Mexico, and, we're probably, I think last year it was over 1 million head of feeder cattle coming in. I don't have the numbers right here in front of me, but, we're going to be off sharply from where we were a year ago. And it's at a time where we just don't have we've got low supplies anyway. So this is hitting at a time when really low supplies. It's going to be a significant hit, especially to those feedlots in the southern plains. So yeah, that's lowering it. And if you look at the beef production forecast for 2025, Megan, if you think back to last year, our USDA spent most of the year kind of bumping that forecast up. We started out with a really low beef production forecast. And then throughout the year, strong steer slaughter weights in particular, and also some strong, stronger slaughter numbers, really pushed 2024 beef production back to basically equal to 2023. This year, we're reducing it. USDA has had to knock down their 2025 projected beef production based on reduced steer and heifer slaughter. And then if you look over the pork side, pork production unchanged, about the same as it was a month ago on the projection. One of the interesting is on the chicken and egg side. So chicken production, broiler production projected to increase a little bit. There's been some hatchery data lately that's pretty favorable in terms of supplies, so some stronger chicken production. But flip side on the egg world, we had some recent cases of HPAI, still and that's still not away from us. It's still a significant challenge here. So egg production lowered based on recent layer chicken data.
When we take a look at, I just want to talk on the poultry side of things. I mean, we've moved through the spring migration season. So typically cases would pull back this time of year of high path. But then the industry has to brace itself for what will happen when migration season starts later in the year. And is that part of the reason why we see maybe concerns that we're not going to see as much production on the egg side of things for this year?
Yeah, I mean, this is you're absolutely right on the seasonal piece. There is a seasonal pattern to HPAI. As things warm up, you typically don't see as many challenges here. So hopefully we'll get that break. But if you just look at like the egg price forecast can tell us, a little bit about what the projection is. So egg price forecast lowered for 2025 again. So this is, we've seen some reductions in the price forecast, which is a good sign. But if you look at 2026, it's still about the same. They haven't changed the 2026 egg price forecast, and we're still talking about some, fairly strong prices here for eggs. So there's a ton of uncertainty there, Megan. It's really, really difficult to try to predict or project what HPAI or any other thing like that is going to do.
Beef and pork exports or let me just try that again. Beef exports and imports. Can you talk a little bit about where projections for those are as we think about that as relation to trade and supply and demand?
Yeah, so the exports and imports both raised, at least the projections for 2025 were raised in this most recent WASDE report. I think there's been on the export side in particular, now exports are tough right now, right? I mean, we've got really strong prices here for someone to want to export beef right now. It's got to have a higher value somewhere else than it does right here, and we have really strong values right here. So that's really changes the import-export balances, the record prices we have. But we've had some strong exports here lately. All of that, kind of to the side. And so if you look at projections for 2025, USDA actually bumped them up a little bit. Now on the import side, also bumped those as well. We're importing a lot of beef right now, a lot of beef from South America. We've got incredible demand for hamburger meat, and we need a lot of lean trim to mix in with these really big carcasses that we're producing here. And so we're bringing in a bunch of lean trim right now in order to mix with our fat steers and heifers that we're producing here. So imports are going to remain high. That is not a signal of something being broken. That is a signal of the markets need lean beef, and we're bringing in lean beef to mix with what we're producing. And really high prices means we keep more of our beef here, and it also means that we pull in more beef from other places.
I think that gets lost sometimes in the conversation when we talk about beef imports, and we have to talk about, and I think it benefits to have conversations about the fact of what we're bringing in compared to what we're exporting, first of all, but also, that we can't meet the needs with lean trim here, especially with, as much beef cow slaughter as we've had in recent years.
Yeah, you're right. I mean, I think back to, I think it was Darrell Peel at Oklahoma State did a study a couple of years ago about what it would take for us to produce enough lean trim in the United States to just enough to mix with, the 50s, the 50% fat beef that we've got coming off of our fed cattle. And the study was basically like, we would have to completely revamp the way that we produce beef here. Like, if we're not going to bring it in from somewhere else, then we're basically going to have to start raising cull cows. You're going to have to take a big set of your heifers that normally would be productive members of your herd, and instead of producing them as fat cattle or as beef cows, you got to kind of raise them to be lean trim, which is just wild, right? And we know that that's not the most productive or economically efficient use of those cattle. So I thought that was a really interesting study. I need to dig that up, honestly. But yeah, I think anything, if you try to oversimplify imports and exports, you're going to make a big mistake, no matter how you look at it, because these markets are incredibly complex and connected. And if you think about all the products that we get out of a beef carcass or any animal, you think about all the different products that get produced from that. It's really, really complicated and interconnected. And markets are going to find the most efficient use of things. And as long as there's not, prohibitive restrictions in place, markets are going to find the way to produce as much as they can as cheap as possible. That's how our system tends to work. So yeah, it's I think a lot of people see these really high import numbers and they immediately they don't like those. And to be completely fair, there are some imports that really do directly compete with some of the things that we produce here. I don't want to hide that or overshadow that. But the bulk of what we're bringing in right now is actually adding value to the beef that we're producing here.
Anything else we need to touch on in supply and demand this week?
I don't think so, Megan. I think you nailed it when you said this was kind of a snoozer.
Some days we get fireworks. This week we're going to get enough time. All right, before I let you get out of here, it's a big week for reports this week. We'll talk livestock slaughter, cold storage I think is out this week, but cattle on feed out as well. As you take a look at what you're expecting in that report. It's ahead of the July numbers. It's ahead of the July inventory report. Is this one maybe going to be a little bit of a snoozer also?
I don't know. So if you look at the seasonal pattern of placements, as we get into May, we typically see a pop here. And so I was looking back at the 2024 numbers. It was, we were lower in March and April, and then in May we saw a pretty good pop back and forth. So based on what happened in April, we were down, not roughly 200,000 head from where we were in March in terms of placements. That was a similar trend to what we saw a year ago. And then as we went into May, we jumped up, nearly 300,000 head from where we were in April last year. So I'm expecting a rebound. I think we're kind of seeing that bounce back and forth a little bit. Now, the question is how much, I certainly expect us to be higher than we were in April. But are we actually going to bump back on those 5-year average numbers that we've seen? I just don't see how we do that. I really don't. So I'm looking closely at that. Really interested to see where we're going to be on placements this month.
Well, we will talk to Kenny about that next week. Josh, great to see you.
Thanks, Megan. Appreciate it. Have a good one.
You too. To have our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com. You can also submit questions and comments. And for commodity market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.